thing is an options flow trading, right? What is options flow? Options flow is so it's a recent market phenomena. It's not something which has been there from decades. Options are there from decades, no doubt about it. But since last 5 to 6 years, but I'm not exactly sure the date or availability of there were few systems, few platforms started coming in market where retail investors can see the options flow directly in an easier way. It's not that it was not available earlier, it was available earlier under Think or Swim or IBKR, other brokerage platforms, but you have to be really, really nerd of those platforms, like those desktop applications, where you have to go and figure out yourself what's the flow or where the market sentiment is going, where the smart money is betting, where our hedges are betting, and so on and so forth. So there was not an easy option. But since last 5 6 years, there are quite few products now out there in market which basically provide this flow data as a service. And then there are a lot of fintech influencer who provide their own service and bake this service as part of their offering. So that's how retail investors like us basically get this options flow data. Now, why it matters, of
So
course,
the insider access, we get the unusual whales option alerts. That is options flow trading, right?
that's true. So, insider access, the service which both you and me have subscribed to, it's really good service. But that service basically have subscribed the unusual options whales platform. It's a platform like if you just Google it about unusual whales, you
Yeah.
can go and create your own sign up and you can start doing it. But then that the service which we have subscribed to it has already subscribed it, and then they have a mechanism where they can alert options into their Discord server through which we can see it.
Right.
Uh, of course, you can query it also. It's not only just alerts. If you want to query certain part of data, we can query that. Uh, so for this particular presentation, we are relying on our Discord service provided by Insider Access, which is available
And
for fintech on X. It's hosted by Peter Tar, a decent person, a good person.
Mhm.
Let me move on to quickly next slide. So let's quickly understand unusual whale alerts. Like what are typical fields or values which you can decipher from those alerts. So these alerts, you know, always have ticker symbol, what type of option they call, are they put, the strike price, expiry, trade size, premium, how much that person or institution who is putting that bet, how much they are paying, right? How much is the open interest to that option, and how much is the volume of the option. So these are the quick fields which you will always find in those alerts. I have screenshot of those alerts, how they look like. We can go through them later, but these are the quick alerts always, right? Uh, Obviously, why they are called as alert, because options are being traded by the point market opens, and in certain in certain ETF tickers like QQQs, they are even carried after market, like till 5 p.m. But for most of the normal stock tickers, all option activity stops at when's the market close, which is 4:30. For 9:30 to 4:30 all day, a lot of options being traded. So not all option trades are alert, by the way. Option alerts only comes in where there is something unusual is happening, at least from the algorithm point of view. It's not that actually it is unusual, but from algorithm point of view. And that algorithm basically keeps us, gives us those alerts. Now, what kind of
Vishal,
alerts?
Vishal, we get two things, right? Unusual whales and then option flow activity in Discord. So when you say unusual activity, we should look at unusual whales, or is it
Yes,
both?
we should look in. in our case, historically, insider access Discord server provided the another platform as a service which is called Tradalytics. So Tradalytics is like just a competitor of Unusual Whales platform, and they
Yeah.
used to provide those options for it. Later, or I'll say recently, like last two months, Insider Access has switched to Unusual Whales as a platform. While Tradalytics is still there, I don't know how long it will stay there, but it is still there. But most of the time, I have seen with experience at least that Unusual Whales algorithm is far more superior in
Okay.
alerting activities
Got
and
it.
the speed. So we try to look into Unusual Whales activities.
I should be looking more at unusual whales.
Yes, not the trade analytics. But
Got it.
some traders will, debate that both are same. End of the day, they all rely on underlying options activity, which is happening on a particular trivial ticker on any given day and point of time. It's just they have different algorithms to pick those activities and then show to the retail trader.
Got it.
Okay. Uh, By the way, just to conclude this slide, what is an activity? Unusual activity is, a large single trade, right? Or a sweep. Sweep is basically a quick urgency where a trader is putting or buying at ask, right? Through multiple exchanges. He's willing to give whatever price it is and willing to buy that trade. That's usually called sweep or uncommon strike prices or expiries. Like somebody is betting tomorrow is Friday, and I am betting $1.5 million for an OTM out of the money call that is unusual. So that somebody knows something why it is betting on that much money on that. So these are called uncommon strike prices or expiries, sudden spike in volume or open interest, right? So for example, there is a Walmart sticker, just for an hypothetical example. At present, Walmart may be on a 97 or a 98, but suddenly for this Friday expiry, um, somebody tried to buy 105 price target. Now everybody knows Walmart doesn't move $10 up and $10 down. But if somebody is trying to bet millions of dollars in that, and the option open interest is like 100 options, but now suddenly 1,000 contracts are traded at a buy price, then it means somebody knows something, right? So those are the things which people look for, retail traders look for, and those are the things which usually categorize as unusual activity.
Got it.
Moving to next slide. How to interpret option flow alerts. There is obviously call buying, put buying, sweeps, unusual strikes, deep ITM. ITM is in the money, OTM is out of the money. Can specific, basically, specific strategies or hedges. Not every alert is a clear signal. There is a lot of noise. You can think about it as like out of probably for a given symbol or a ticker, there would be a chance that you would see at least 50% of noise and 50% of actual signal on which you can act or you can make your own bet. So you have to understand how to decipher noise versus signal. It's not that these algorithms don't do it. These algorithms are designed to present only activities which are worth reporting. So, for example, large institution keep on hedging their bets, right? So they do usually hedge their bets by trading deep in the money. So, for example, if they are selling uh, put in deep in the money or buying call very deep in the money, it's just that they are hedging for market. If in case their stock prices go up, they can benefit from it, or they can protect their stock value if they know that something else can happen and they try to do. So obviously these algorithms avoid those signals, they don't report it, but still there are use cases where unusual activity can can be a noise also. So we'll see which unusual alerts we can act as specific inputs or which we can avoid as a noise.
Yeah.
Uh, okay, let's move on to next. Last thing, I guess, on this particular side is volume versus open interest. It's a very, very important factor. Uh, any given contract, if you see unusual whale alert about a ticker, which is relatively calm, ticker. But if you see that a contract is now being traded, let's say for 100K or 500K, uh, and the open, whenever that option alert come, it will say that, okay, the open interest is, let's say, 100, but the traded volume is almost 5x or 10x of it, right? That tells you a story that somebody knows something about, or some institution is trying to do something about this stock for that particular strike rate and in future, and he's willing to put that much of money. uh,
So these things may be commonly happening just before the earnings, and then how do you react to those um,
so
option flow alerts?
if some usually I see if there are types of stock tickers, right? There are heavily traded stock tickers,
Yeah,
which are those obviously some of
like
the
the
Max
Teslas and
7.
Nvidias and all that. Yeah,
Yes, some of the Max 7s are there. You will always find buzzing activity there. So you would not be able to decipher in which way the earnings are going to go because of those signals. So betting on those signals on earning for such large mega caps, it's not a reliable
very
a way
risky.
of,
Yeah,
very risky. But for stock tickers which are not that much traded, and have consistent one directional bet being placed over a course of few days before earning, can definitely signal the upside
and
activity.
direction. Okay.
Yeah. But how to balance it so that you don't get, because all everybody knows that near the earnings, if you try to play a directional bet and if it doesn't go in your favor, or even if it goes in your favor, but the stock moves only 5%, your option value or your premium will be crushed because
Yeah,
of the implied volatility crush. Because after the earning, stock moves only 5%, you were betting for 10% or even 5%, but your premium is no more worth of what than you paid earlier. So that can always happen. So how I usually trade in those circumstances, if I see there is a credible signal for a stock, but then again it cannot trade more than 5 or 10%. So in that scenario, I won't trade in a short-term bet. The best way to trade is trade at least 1 or 2 quarter ahead. Best is 2 quarter ahead, so you have a long leap, you have enough time baked in. You are paying maybe a slightly up for the premium, but because it is long, volatility at that premium is low compared to the next week expiry or next month expiry. So you will be protected with the IV. And even if your stock drops because of regular, guidance low or some or other factor, you have still enough time to recover from it during the next quarter or the next to next quarter, and you will be able to get your money back. So that's the typical strategy which I employ if I am playing earnings based on the informed signals. It's not like just blind bet. I'll go and do it. uh, Very important piece of information, importing incorporating macro and market context. all all bettors can bet that this particular stock can go up or down as per their thesis, but nobody can bet on the macro uncertainty, right? If tomorrow somebody goes to
yeah,
war, or
yeah, yeah.
didn't happen, or Fed comes out of paper and increase or decrease rate or things like that, right? So there is no guarantee of any signal can work out. And macro events you have to keep in check in the risk. So for example, if your earnings, if your directional bet is somewhere near the Fed announcement or some major trade deal, avoid. Don't trade. It can always go in your
Wrong
not
direction.
in your, yeah, not in your favor. If you're, especially if you're making on short term expiry options, those are very risky. But if you are making a long term bet, so for example, in last few uh, Fed speeches, at least last two Fed speeches, they were kind of a nothing burger, right? Everybody knew that
Yeah.
they are not going to do anything.
Yeah.
Whatever they have to do, they have done the damage in March already. So they
Yeah.
are not going to do anything. Like that, if you are aware of macro events, and you have a guru who can tell you that, okay, this is not going to impact much of market, there might be some noise, use the noise for at your advantage, buy something cheaper and then sell something higher. So all those things you have to keep it in context. So and by the way, sometimes some of the macro news is also being aware by some of these institutional hedges or smart money. You can always see that if there is a televised event, let's say Fed news or a Fed decision or something else, right? Or a CPI or a PPI or whatever it is, right? You can see, if you know that this, if it goes, let's say inflation is going to go higher, right? And if the inflation goes higher, then it also means that rates are not going to come out. It also means that your tax rate might be in trouble. And if you see consistent before that event, if you see consistent bearish bats in the market, it's the right time to probably exit from the market. Or if you're long in the shares, just be long in the shares, do nothing,
Yeah.
just don't do nothing. That's the best. So sometimes these events also can be seen as a reflection in the option alerts. Uh, I'll move on to next slide. Start specific events, obviously mergers, sometimes insider buys. By the way, options, unusual options also alert about insider buy or insider sell. So you can always, whenever you search for a ticker, it will show you if somebody have bought or somebody have sold. Obviously, these are all after the market effect, which means they usually comes the market close and usually comes once 10K filing has been done. It's not something which you will know immediately. Uh, know the technical levels, regardless of options. See, when you see a option bet of, let's say, a $5 strike up from the current price of the stock, and that strike price is a known resistance in a weekly or in a daily time frame, and once you reach to the target, it's the time to take the profit.
Yeah.
It's not the time to just to stick and think of getting more out of it. So no, they expect spike in option activity, interpret in context of guidance and historic volatility, how much it can go up, how much it can go down, when RSI is overheated. So all technical levels, my point is, do play even if you are playing with the option activity and option strike price or whatever target you have, whatever direction you have, right?
Yeah.
Uh, so let's move on to this entry and exit. Again, these are options fundamental. I'm not covering them up here, but I'm just trying to put it out there is that you should not get into options trade where bid and ask is
Spread
very
is big.
wide.
Yeah. Spread is big. Yeah.
Yeah, spread is very big. So, for example, a typical spread big is, let's say, if you go to Coin, for example, Coinbase, you would see a dollar wide spread or micro strategy, a dollar wide spread between any given price time you try to go and buy, and sometimes $3 wide if you are going for a 1 year leap type of scenario. So those are the things which you should avoid if you are making in leap scenario. It's fine if you can find a midpoint of it, but for a short-term options expiry, don't trade those, because that tells you that's not a good liquidity area. What I meant by liquidity is, say if you bought a wider spread by paying a higher premium, but when you're trying to exit it, you have to
Yeah.
exit most likely at the lower
Yeah.
portion of that spread.
Yeah.
That's very important. Second is time decay. Know your expiration. Don't go into degen mode of this 1 day expiry, 2 day expiry type of thing. That usually doesn't work out. It's only very advanced professional traders who can watch stock market for minute to minute, and then they can place a directional bet. They make their 10-20 cent per contract, but they trade in the volume of 100 or 200 or 500 contracts. So they make
Yeah.
their, don't get into those type of options. That's my simple strategy.
Yeah.
uh, Delta shifts, bid ask spread, monitor your contracts. If you are getting into such type of small expiry bets.
Yeah.
Last thing is Delta. There are technicals, or I'll say geeks of the options. So there is Delta, Vega, Theta,
Yeah.
Gamma is also there, but too much of technical, and this is not the session for to go into that detail. But try to be as near towards one. The further you go towards or lower to the one, which is like 0.9, 0.8, 0.7, 0.6, 0.54, 3, 2, 1. As so, if you go towards zero point 0.1, that's most out of money you can imagine, and that much is difficult, or that much is the least probable the price action will be in that favor. So try to stick around zero point 0.5 to 0.7 or zero point 0.8 type of delta. One of the delta is best, but that is basically ITM. If one is the delta, you won't make much money, but still you are on a safer side of the bet.
Yeah. I
And you
usually
will,
do in close to in the market.
yeah. Usually, you would see when you see these option alerts, you would
Sorry.
see that
No,
okay, some of
no, not in the market, close to the strike price.
yeah, close to the strike price. So close to the strike price are usually in the range of zero point 0.8 to zero point 0.9 type of delta.
Yeah.
Uh, and by the way, what is delta for people who doesn't know?
Yeah.
It's
For every
basically
unit of share price move, how much your option will move, right? There's also
correct.
time decay there.
Yes, yes. Uh, so let's move on. Let's go to the oops, key of the
I'm
thing. So
glad we
bid
did it
was
one on one because if we had done with the other folks who are not very familiar with option, you'll have a lot of fundamental questions.
yes, there. Yes, it will take time if somebody is new in this area. Bid versus ask and calls and puts. So now once I have that screenshot of option alerts, I'll just pause this. I hope it's still working. Yeah. So call options at ask is usually a bullish sign. Why it is bullish? Because people are willing to pay the premium price whoever is asking for it. That is complete bullish. So you would see a call option activity saying call at ask. If it is at ask and somebody is paying that premium, it is bullish. But if it is a call at bid, it's not usually bullish. It's bearish. Somebody is basically selling call or writing the call, right? And obviously, people are just buying because those options are available. So if at bid, it is bearish. So not all call options are bullish. Same way, not all put options are bearish. That's the point. You have to understand the difference between bid and ask, right? And there is further nuance to it. How deep is the here ask and bid, right? How deep in the money the option is trading, how far is the expiry, how close is the expiry, and things like that. So these things comes in play. uh, the more extreme ask it's going, right, and the more clear to closer to the expiry it is, it means the more bullish it is. Basically, the further it to the expiry, the long leap it is, regardless of it is paid at ask, it is just a, it can be just a hedge, right? That okay, I'm not sure if it is going to go 10% up tomorrow. Let me buy at least some leaps. If it goes, it is good. If it doesn't, eventually it will go there, so I am protected. So that kind of bet is can also be always there. So that's why it's like you have to look at what is ask and bid and then go to the further details.
Go back to
Uh,
the screen 1 minute. I'm just trying to internalize. Call option at ask is bullish. Call option at bid is bearish. Put option at ask is bearish. Put option at
yeah,
bid is bullish. So it's like put option at ask, meaning I'm buying a put option,
put put
and
option.
then
Yes,
I'm selling a put option is bullish. Yeah, that makes sense.
that makes yes,
That's the nomenclature they use, call option at bid and put option at ask.
yes, yes.
I'm not
You'll see
familiar
that.
with nomenclature. Okay.
Yeah, yeah. I will see the screenshot and we'll see using two or more. So this is multi-lag strategies. You would see this term used somewhere in the option alerts. It's basically just say that okay,
Yeah.
whoever plays that bet is basically going through multiple exchanges
Yeah.
and willing to place multiple bets
Yeah.
basically. Uh, OTM. I'm not again. We are out of time, so I'll
Yeah.
skip this slide. Uh, right. So let me know if you are able to see this. So let's see if I can zoom. There it is. Zoom, zoom.
Magnify slide.
So if you see here, what I did is I tried to put some dates. So starting 1st of May, right, you would see these alerts in the Tesla stock. And on 1st of May, most of the run from 220, 240 onwards till 270, 280, it is already done. Like stock did move good amount of price already by then and have plateaued for some days basically. And then the new option start activity started coming every day. And in between
So
these
sorry, Vishal.
dates,
So
you would also see,
you took the past information and put this yourself to analyze.
yes, y-
Because
just
the
to
way
give
we
you
we
give
see,
example.
yeah, okay.
Yes, I will show that also.
In practice, also
Uh,
you do that, like Tesla. Oh, you can just do the ticker search and then you get all the information one by one.
yes, yes. I usually do the ticker search, but this slide is I only put it to make a point
Okay.
that consistently what I see is a bullish bet on Tesla day after day in different forms, except the 2nd May activity,
So
and this is
the green line, sorry, I'm interrupting you. Green line means it's bullish and the red is bearish.
it's usually, but what they do is they put green line for call and red line for put. You have to read still if it is an ask side or if it is a bid side.
So how do you read this ask side? So first one,
It's written here, ask side.
कहाँ पे लिखा है? I can, oh, this, oh, अभी, now I can see because this meeting has been recorded. वो आ रहा है बीच में. Okay. Ask side. Okay. Ask side means
Yeah,
it's bullish.
yes, yes. So as you can see up here, on 1st of May, lot of people are and see the premium size, right? For a stock of a size of Tesla, 100 200K doesn't matter at all. Like this is some rookie making some bet. I don't give a rat shit about it, right? But if the premiums are going over $1 million, right, then yeah, it's kind of interesting. Let's go through it. Let's dig deeper, right? So this is one bet where you can see somebody is making 340 606 June call of 36 DTE and putting $1.7 million. Average fill is 6.0. OTM out of the money. This call is 20%. And open interest was 379. And overall volume is like 2,758. So it fit in all of our parameters, which we just discussed. That
So the
OTM
average
is
fill is what? That is a premium? $6.50?
yes. That's the because this is a multi-leg strategy. Like somebody put.
Yeah.
Uh, That's why it's an average fill. If it was just one single trade, it would be not have average fill type of scenario.
Okay. And the bid
So
ask 0% 99 means, there is no.
it's basically at ask. Like whatever was the ask price, somebody just came and sweep it all, right? So they put a lot of money. Whoever was writing the call, they just got rug pull. Like they got everything. So it's 0 by 99, like 99% of the contracts were traded at ask side. That's why it
Okay.
is ask.
Okay.
Uh, by the way, this is a multi-leg volume. It's not a multi-leg, so it's 0%. It's usually written up here like how many of them are multi-leg.
And what is
Multi-legs are
volume ratio to open interest ratio 7.28?
so over
What is the good
open
one?
in, open interest is always about how much is at present open interest, and overall volume is how much of this contract volume is.
Correct.
Right. So somebody is basically buying. So you can always divide, right? So if the average fill is 6.40, right, then and somebody is buying this much, so you can say 6.40 multiplied by this much of volume, right? You would approximately receive the premium of size of it,
Correct.
right?
No,
So
my question was more on the ratio of volume to open interest.
you would,
How do I
so
interpret that number?
it is 7.28 times of the open interest.
Right.
Right. So you can see this in
So
numbers. So
what is a
seven,
good number? Is it 5? Is
as
it
I said, like if it is 2x of the open interest,
okay?
usually because see, if there is 100 open interest and I am going and trying to buy almost 3x or 4x, and in this case it is 7x or 7.28 times, right? Then I'm pretty much sure what's going to happen up here, right? I'm not a rookie which is spending 1.76 million. But and then what's more important is consistent signal.
Yeah.
Retail traders should not jump on in by just seeing one signal. Like we don't have a money or patience to lose for small trades, right? So here you can see this contract. So it started all here, 12:15 first hit. You see the time also always. Time is important. So
Yeah.
12:15, 365. Somebody paid this much. Then 12:51, like after almost 30 minutes, right? Or 40 minutes. Then again this much. Then again this much, right? So this basically tells that somebody know consistently a market or smart money is betting. Anyway, this is like a very small activity. I'll show you. Hmm. You see this part, I'll share the slide. On one day itself, almost huge number of bets are coming, like 1.2 million, 12 million, right? 3.2 million, and all of them are OTM, and all of them are either ask side, and some of them are bid side, which means that okay, somebody is trying to protect their bid, long calls also.
Or maybe the spread. They may be doing the spread.
They could be just a spread also. But overwhelmingly, if it is all ask side, yeah. So we were talking about this option activity, right? So I'll skip to it now. Let's quickly go through how I actually see it myself, right? So this is our service of Discord. Let it open. Why it is coming like this? Okay, hold on. Let me quit. I guess too many applications. Uh, I'll say, just give me 1 minute. Quit Teams. I'm just quitting few application to free up RAM. Discord. This is an old computer.
Hmm.
Checking for updates. Discord is loading. Yeah. So we are here. This is profits taken or insider access. Discord. Here is see most of the channels I've muted except the day trade ideas or insider day feed where Peter do something or talk something. The other
Hmm.
very two important channels which I have enabled is of course these days POTUS Trump Tracker,
Yeah. Yeah.
because
Yeah. I see that.
Trump himself is the and he can swing market. Otherwise, it's option flow stream. And the same app I have in my mobile, as I said to in our group also, that I receive notifications and then I just keep a tab on it. And if something really important. I exit my positions during daytime because that's what all I can do. But in near close, I come back through computer or try to come back through computer or through mobile and then try to act upon the option flow stream. So here we are on option flow stream today, right? This is was the last read messages are like what I have already read it. And let's see what, since I have not read it since three start of this meeting. So I can see it's an ask side. So somebody is betting some bearish
You're
stuff
looking at option flow or unusual whale?
on option flow stream. You see option flow
Yeah.
stream.
I
On
see
this
that.
option flow stream is
But
powered
I
by
thought you focus more on unusual whale.
unusual whales queries. So this is queries.
Yeah.
Queries are specific if you want to query something, and I'll show you how to query also.
Okay.
But here we are just talking about option flow stream, and this is more important than this because here you supposed to tell unusual whale queries about a ticker and then ask some data about that ticker, right? And this is about actual market events or information which is streaming, like as it happens. There is a 15-minute delay as and when this option would have traded, and then I see it up here. That's the only latency is there, right? And of course a lot can happen between 15 minutes now and then. That's why you don't go for things which are small size, right? Or small noise. So for example, you can see there is a core weave option which is of like 138. I'm not going
Small
to.
wall. Yeah, small.
Yeah, small wall. I have seen, by the way, today Apple bearish bids. Now I see some big, actually bullish bid up here. So you can see somebody is basically uh, writing a put or selling a put, right,
Yeah.
for
Yeah.
250 of very close, just next month, monthly expiry 620. We will see actually to this content. This looks really interesting. Somebody put a $20 million. That's a huge amount. Open interest was, but it's like a 3x of open interest,
Yeah.
4984,
Yeah.
right? This looks interesting, right? We can quickly check anything else
What's the
important.
premium there? Once again, go back. The
It's
premium
somewhere
there
around 20 million.
is
20 million.
average premium, average fill 41,
Average premium is
55.
41, which is
Yeah.
basically means
I understood.
4100.
Different contracts. Yeah.
Yeah, yeah,
What?
4100.
Okay. What is multi-leg volume? 1%.
It could have happened that some, 1% of this trade has been executed through maybe one more than one exchange. Exchanges are like NYSE, there are multiple exchanges, right?
Yeah.
So happy hunting, and then let's see what we else have. Some quick Vic, Roblox, not interested. TM, FND, not interested. So earlier, before unusual, see, this is the unusual whale icon, and this is a Tradalytics icon, this Trady Flow. So this was the earlier service which Insider Access used to provide. It was not much.
So which
Uh,
is the unusual whale you said?
See, unusual
That's
whale is a platform. It's like a
okay.
SaaS service.
Understood. Yeah. So okay. So one
Yeah.
is Tradalytics and the other is unusual. The whale symbol is the unusual whale there.
Correct, correct. So
Okay.
now if somebody is yeah, good. I am already in Mana. Happy to see that our side again. So this is again strong, right? Core
Very
weave.
strong.
So right, so Core weave is a $90 stock. Now for a $90 stock, you already know the market cap of it, and somebody is putting $2.5 million. It is good. It is a good bullish bet up here, right? And it's out of money, not huge out of money, 4%. So this also tells you it's a cautious bullish bet, right? It's a 620, which is next month expiry, not too much of time.
Mhm.
So right, it's not a very long leap, so it's not just an hedge. It's a bullish bet. Definitely, somebody know that it can go up to 90%, right? And see the time at 3:56 p.m. These are the times when most of the unusual option activity would come at the very last 5-10 minutes, right?
Mm.
Somebody is getting impatient not to wait for tomorrow market open and wants to put their bet. Okay,
Okay.
so let's go and look on to that Apple bet. Let's quickly see, as we have seen today, why somebody is putting that much money. This can be, by the way, a typical institutional thing.
Mm.
Nothing out of, but let's see how it is. APL. Let's go to Think and Swim. I'll put APL. So today APL started at around 204. Yeah, it closed good. Like it didn't get the full green, but it recovered a lot of ground. Let's go to the trade part options. So this is the full option chain. And I guess it was for what time? Not here, sorry. There's a Discord. It was for 620. So let's go to 620. So this is the 620 thing. And I have configured my option change to show all these fields in your own respective traders platform. You should be able to configure what fields you want to see. I usually interested in last, which is like what's the last contract have been traded for what price, right? Net change, change, delta, as I say, low and high. Low and high is like how low has this contract has gone at present since open, and how high it has gone at present since open. Volume, as I said, like what's the volume traded today, and this is the open interest. So we were talking about 250. So let's do this is the 250 uh,
Duration, yeah.
put. Oops, 250 put, and then you can see. Let me just move this volume. So you can see that open interest was 1336. You see, and you should also see that this is a consistent pattern up here, right? That open interest is this low, 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 and then somebody came up all the way up here and started writing these puts for 250, 245, right? More than the open interest. So this can be just because, see, what is more bullish? Let me put it in this way. What is more bullish? Writing a put or selling a put deep in the money, because this side is deep in the money, is more bullish, or somebody is buying a call of 250, right? And putting that back, that side
Yeah,
of
it's more
equation.
bullish, right? Somebody buying a call is more bullish than selling
Correct.
a
So
put.
that's perfectly right. So that's because this only means that somebody is willing to buy the share at 250, right?
Yeah.
But to reach at that level, right, they have to exercise it. But at the same time, up here, they can always exit. So here, upfront premium is very less, but they are also risking a lot of amount of money. So that's why I don't trust sellers of the put if they are really, really, really deep. If somebody is coming up here, somewhere near the money or a little bit far of the money, and then writing put or selling puts, then I will see a little bit more bullish. But I prefer more of the call. Somebody is buying call at ask, and then it's obviously more bullish. So that's why I said like this is a typical institutional hedge. It doesn't sound really, really bullish to me. Now, how I do a quick search? Search is basically I come up here in the option. This is my option flow stream selected. I usually, let's say I want to see what's happening today for, let's say, Tesla, as we discussed Tesla earlier. So I would say Tesla. It will start search. Uh, I can see here there are some good alerts today. So I can see 152. Somebody traded 440C, which is definitely more than what it is trading today of the price, 32 DTE. So
Yeah.
somebody made 1.5x times, like itna ही open interest था, and somebody paid $3.1 million. So it's really bullish. But let's see what else we have up here for today. So 152, that happens. 150. So usually you would see these alerts come in this type of pair, 1 minute or 2 minute delay, but you would see. And the why I am saying it is a pair, you would see this sign, clock, right? Interval, 5 minute bid side, and then hot contract, finally bid side. And then it is a bid side for what? It's a call actually. So this is a bearish bid somebody is placing at
Why
151.
is it it's a call action? No, it should be asked, right?
It,
Then only it's this, yeah. Then it made
yeah,
it. So bid is more
it
bearish.
takes it takes some time to adjust our mind to ask versus bid and all that.
Yeah.
And traders do mess up in this. They think, yeah, I see green, so that means bullish, and they get into it the wrong
Yeah.
side
If
of
you
the
look at
position,
yeah.
right? So this is bearish. Let's see other updates up here, right? So yeah, some politicians sold something,
It's
some
very
small
small.
time things.
Yeah. We
Don't
can
worry
ignore
about
that.
it. Then again, this is a ask side one, right? So 390 sees. So somebody is bullish, 1.2, 5.16. Yeah, then again, few people are bullish. It's basically writing put, but at bid side, right? So not much happening today, basically. If you see all on the balance, it's like market is not sure, uh, or
Yeah,
people are
it's
not
both.
sure if
Yeah.
they're totally bullish or totally bearish, right? So they are
Yeah.
making both sides of the balance. It
Yeah.
can be same people, can be different people, whoever it is. I am not interested in to get in this trade today, at least.
Right.
That's my decision will be at 3:30. That boss, this is not a good time.
So I was doing the same thing, Vishal, on Discord. So I went to option flow, right? And then I put
Mhm.
the search. Let me see NVIDIA, for example.
You want me to search for NVIDIA?
NVIDIA, I'm getting it. So this is, I got only one.
Hmm?
Huh? I need to go to, should I go to option flow, then go there to search?
No, just what are you looking? See, if you're looking for alerts, alerts are in option flow stream. If you are looking for consolidated data,
Yeah.
then you are looking into unusual whale queries.
No, no, I'm looking for what you just did for the day's
So
action.
then you are looking into option flow stream. Just select the option flow stream tab from left, go to the top right search box, and then
Yeah.
type the ticker, and you would see the activities as uh, they happen. First one is the latest, the later one are the later
I'm
than that.
not getting anything. I don't know why.
In Discord, you are searching.
Discord me, eh?
Mhm.
Mm. See, I have different tabs, right? So I go, there's a profits taken up, there's a broader search, and then as there are different tabs. So I go to, see on your left side, I go to option flow stream, right?
Yes.
And then I do the option flow stream, and then there's a search.
Yeah,
Uh,
it is a search. See, if you are using a mobile app, interface might be slightly different,
yeah,
but
mobile
there
app.
should be a search option.
Yeah, there is. And I'm doing
And then you
NVIDIA.
just type the ticker.
Should I do this? The messages, should I go to threads? No.
Nee, see, what it do is when you do it for search up here, right? As you look in the screen, it will basically try to give you all the results which happen across all the channels for NVIDIA today. It will not only look into just this particular channel, but let's say somebody queried for NVIDIA, right? You will
Hmm.
see that result also. And that is the latest result you will see. So somebody queried for NVIDIA today for this particular contract, and you see that result first. So you can ignore that if you're not interested in his query, you can start scrolling down, and then you would see other alerts.
Yeah. I'll check with you in the evening how to get that.
Yeah. Yeah. So for Nvidia particularly today, I see at least some bullish, some bearish bets. It's a mixed side. Uh, In the morning, there were quite a bullish bet because it opened very low. But then by the evening, once it matched, it start again putting bearish bets. And see, for tickers like Nvidia, Tesla, right, 1 million, 1.5 million is nothing burger,
Yeah.
basically. So yeah, now what's the result? I told